Good morning, everybody. It's Chris here from Student Education with the 4 Majors Notice Update for the 20th of July 2011. Hi guys, just going to be going over the 4 majors this morning, starting with Euro against US dollar on our CTC strategy template. So having a look at the daily here of Euro. Notice that we have been in an uptrend for a extended period of time. However, just recently we started to see this intermediate downtrend forming, and we've seen price pretty much testing a prior strong support and resistance level around the 1400 mark. If I go ahead and put that in, you can see that bounce. We saw a lot of negativity in the market just recently, and then we've seen some upside movement. A hammer followed by a bullish engulfing, and then we've seen progressions slightly higher, slightly price finding a bit of resistance in some areas. Noticeably, this prior support here at roughly the 1700 mark, and you can see price fell to materialize or trade higher that day, and we saw price revert back down just short of the 1400, and then we've seen a bounce higher as price action occurred at the top end of the wick. Very indecisive. This spinning top, don't get me wrong, it's still engulfing the previous range, and then we've seen the European session this morning, the European session open after the Asian market trading higher. Ideally, we'd like to see a definite break and close higher than this area has resistance level of prior support, because it's now a resistance. If you can see a nice juicy up candle, ideally closing higher than the previous candle's high, will definitely give us scope for further extensions to the upside, and in doing so we could look at potentially these targets here along the way. This prior support and resistance here just below the 4300 mark before we reattempt the intermediate trend to the upside. So intraday we should be looking for opportunities for further upside movement. Be aware that we are trading around this prior support and resistance area, so we could see a bit of consolidation before we see further upside movements going into the US session. But if the momentum can be kept and we can ideally see price trading above the wick of yesterday's high at 1421.40 at least, then we're definitely going to be seeing further upside movement to at least 1430 for the remainder of this week. Moving on to sterling against the US dollar. Let's move it out so you can see. Here again, same thing. Intermediate trend is looking negative at the moment now. We've seen price failing to break above this intermediate downtrend that has been forged since we saw the sterling reaching a high of 16,700 back in May of this year. Price is trading below a major support and resistance level. As you can see here, it's broken it, and now what's doing, it's come back, it's pulled back, and is retesting this intermediate downtrend now, which is going to be the new trend to the downside. Yesterday was a good example of that. We saw price finding support in the 200 period moving average and moving higher. A lot of momentum yesterday, a lot of movement, a lot of trading scope here in terms of width. However, you can see the price still failed to break higher than this resistance level. If we want to see further progressions to the upside, we do need to see price breaking and closing higher than this quite bullishly to confirm that the momentum is now looking favorable for further scopes upside. Notice the CTC is still negative because we're on a negative trend, intermediate trend to the downside. Even though we are seeing consolidation, we're still looking negative because we're not trading higher than the price swing low in this case, which is way up here around about the 1650, 500 mark. So ideally we've got to see price trading well above this major trend line again to see further extensions upside. Until such time as that's doing it, then we're going to be seeing further consolidation and possible opportunities for further downside movement as the market has been dictating a lot of negativity out there. So as we're going into a squeeze pattern because we've been squeezed between 2 points. The institutional moving average, the 200 and the prior support and resistance level. But you can see on 2 occasions now we saw a definite bounce to the upside, so that's going to be our support. This is our resistance, so you can see we're now channeling between these 2 points. Got to see a break soon. Got to be trading below 1605 to see further downside movement to back down to the 15,900 or even possibly 15,800 mark that we saw just recently. Or we need to see a break higher and close higher than this price swing here, and a break above the intermediate or downtrend roughly around 16.15 in my eyes, or possibly slightly higher than that. But you can see that definitely needs to be trading above that. By doing that and closing higher, it needs to close higher than this candle here, confirming bullishness, nice bullish engulfing. We'll probably see a consolidation if that occurred to confirm the breakout, and then a continuation to at least the underside of the intermediate or the major trend line before we see a break higher and trade higher. Until such time, we're looking for consolidation because we are at a resistance level, so we could see consolidation today, possibly opportunities for intraday shorting. Got to be trading above this to be even thinking about going long. So let's look for an opportunity for shorting. You can see that price action failed to break higher. It's not to say it's not going to break lower, break higher. Ideally, we want to see it trading above 1500 at least to start with. Until it's doing so, we could just see wicks appearing, and you could be false trading, false breakouts, and we don't want to be doing that. So ideally, when we're seeing this, we want to see either two things happen. We want to see a bullish engulfing to confirm break and possible rally to the upside, or a bearish engulfing to confirm that negativity is now, well, this resistance is we are seeing a definite resistance level here, and we're seeing possibly opportunities to the downside. Next up is the US dollar against Swiss franc. Here again, very much in a negative downtrend. I'm just going to put the major trend here. You can see very negative, a lot of movement to the downside, and what we've seen over the past couple of months is the US dollar breaking, closing high, lower as price has been moving, inching its way to the downside. You can see we've seen consecutive breaks on a number of occasions, pauses, consolidations, and breakouts. There are a number of them along the way. Beautiful trading, this particular pair. However, just recently we've seen a lot of consolidation. Price was trading in a very much an extended consolidation range, and we've had a break of that consolidation range just recently. There we go, a lot of consolidation here between almost 2.5 months. Then we saw a break, and now we're seeing a pullback. However, it needs to trade above 830. You can see that price almost made it yesterday, but fell to. And then Asian market trading going to European session, we've seen a very, very, very small trading range. So, what do we need to see from this pair to be looking? Well, ultimately, until such time as it's trading above 830 again, we're not going to see any upside movement generated from that, or possibly further movement. We do need to see price trading well above this box here to see confirmation of definite bullish moves to the upside. Until such time, we should be looking for further shorting opportunities. We've seen a pullback. This pullback is only it will be irrelevant until such time it's broken above the 830 mark. It needs to be breaking above that to confirm that the bullishness is looking more in favor of the US dollar against the Swiss franc. However, as things pan out, both stateside as well as in Europe, you're going to find that the Swiss franc is still the currency of choice to be investing in, and you can see at long term the Swiss franc will probably just come out the beneficiary here, and we can see the US dollar failing to break above 830. So we need two things to occur. If the US dollar is still to remain bullish, we need to see a break and close higher than 830 to confirm that there's a possibility of further upside movement to at least this intermediate downtrend, or sorry, the major downtrend in this case. Or we need to see a bearish candle here, confirming this is still resistance. Prior support is the new resistance, and then we could be looking for further downside movement. So we could see a breakout, pullback, consolidation, continuation to the downside for this pair. Last pair of the day is the US dollar against the Japanese yen, and here I have the daily time frame. You can see that we've seen price breaking a prior strong support area just recently. Notice this pair has been consolidating to the downside for a number of months, and I did mention on occasion we need to see a definite bearish engulfing pattern to break lower than the 80 to confirm bearishness is still in favor. Notice the CTC is primarily still red across the board, bar a couple of days where we've seen the CTC going blue. However, because it hadn't been trading above a prior support and resistance level, these blue breakouts here are null and void. Besides this one over here, the intervention candle we saw, this intervention trading range here that we saw from the G7 as well as Japan just before the earthquake and following tsunami in Japan, that didn't materialize, and we saw a breaking and trading back in its trading range below the institutional moving average and in this negative downtrend, lower highs depicting the squeeze, needed breakout, and sure enough we saw the breakout, followed by a consecutive week of trading sideways, long wicks, indecision, a lot of indecision here, spinning tops, dojis, another spinning top. Then today we've seen a lot of selling occurring over the Asian market going into the European session. We're still seeing a bit of selling. This definitely is definitely a ceiling level, roughly around the 79. There's definitely a ceiling level there. Price has failed to materialize above that area there. It's 79.20. So until such time as price is trading above that and closing higher than that, then all we're going to see is this is just a consolidation range before we see continuation to the downside. We need to see price trading above that to give us indication of further upside movement. Until that happens, we should be looking for further shorting opportunities because the CTC is still showing us negative momentum and we're trading below a prior long-term support line, which is a bearish signal. So until such time, we should be looking for further shorting opportunities. We have been as low. See the underside of this one? Yeah, we're trading at that area right now as we speak. We have been as low as $77. Sorry, 77. So we break and close lower than where we are now at the 78.80 mark. Then we should be looking for further downside movement. This daily candle has to close negatively. We've got to see a bearish engulfing here. And then we should be looking at 77 as our next target for this pair. That's it for today, guys. Hope you have a fantastic trading day. Please, if you are trading, make sure that you're trading with the proper money management rules. I'm finding a lot of people out there don't do that. They might have the best strategies in the world, but if you don't back that up with sensible money management, especially in today's volatility, you find that you're just still going to be posting those losses. So very, very important. If and when you see those profits, please take them, bank them, keep them. The more consistent you are at banking these figures, then the long term it just means that you're going to be far better as a trader. So take those profits when they present themselves. The more consistent you can become at doing that, you're going to find that your trading is going to just grow in exponentially. So make sure you follow the rules of the CTC in particular and just enjoy it. Look for potential breakouts. Be patient. The ones that are patient are the ones that are rewarded. And most importantly, you got to trade serenely.